This video examines the nature of public expenditure, its purposes, methods to finance it, government influences on the private sector, and comparisons between the effectiveness of public expenditure and private expenditure. Public expenditure. Public expenditure is the expenditure done by the public sector. It includes expenditure by the central government, and expenditure by the local authorities or regional bodies and state-owned enterprises. There are two broad categories of public expenditure. One is called exhaustive spending. This involves the public sector directly buying goods and services such as buying medical equipment, paying the police, and building roads. In this case, the public sector determines the use of resources. The other category is transfer of payments, transfers of money to people, for instance, pensioners, and the unemployed, and to firms, in the form of subsidies and grants. This is non-exhaustive expenditure. In this case, the government does not decide on the allocation of resources. The people and firms, receiving the financial support, make the decision through their purchases. Government influence on private sector expenditure. The government influences private sector expenditure in a number of ways. These include taxing income and expenditure, providing subsidies, giving grants, influencing the level of economic activity. Private sector investment, for instance, would be increased by the introduction of government investment grants, a cut in corporation tax, and a cut in the rate of interest. Investment grants would encourage private sector firms to buy more capital goods. A cut in corporation tax will increase the willingness and ability of firms to invest. A lower interest rate would reduce the cost of borrowing to buy capital goods, and would reduce the opportunity cost of using retained profits to buy capital goods. Comparison of expenditures by public and private sectors. There is some debate as to whether public or private sector expenditure leads to a more efficient allocation of resources. Do households and firms make better decisions, or the government? In practice, there are advantages and disadvantages of both private and public sector expenditure. A new airport, for instance, could be built by the private or public sector. There may be a number of advantages in it being built by a private sector firm. The profit incentive and force of competition may imply that it would aim to build a high-quality airport at low cost and in less time. There is a risk, however, that a private sector firm may be a monopoly, and hence may not be forced to keep its costs low. Thus, it may charge a high price for building the airport. Also, a private sector firm will also take only private costs and benefits into account. Using public expenditure to build an airport may also have its own drawbacks. Knowing that the state is paying, a state-owned enterprise or private sector firm hired by the government may not keep its costs down. A state-owned enterprise may lack the commercial expertise to complete the project on time. There may also be delays in decision-making by the government to go ahead with the project. A major benefit, however, of a major investment project being undertaken by the government is that it will base its decision as to whether to proceed with it on the consideration of all factors involved, that is social impact, costs and benefits. It is likely to carry out a cost-benefit analysis, CBA, in the place. Cost-benefit analysis involves measuring all the costs and benefits involved. In the case of an airport, the private costs will involve the cost of the labor employed to build and run the airport and of the building material and maintenance. The major private revenue is the money that will be earned. After measuring the private costs and benefits, the economists carry out a cost-benefit analysis, then seek to place a value on external costs and benefits. This is not an easy process. The external costs may include operation of the airport damaged to the environment, noise due to risk of accidents and congestion near the airport. The external benefits may include employment in the area due to tourism and making it more attractive as a site for domestic firms and multinational corporations. when all the calculations have been made. The social costs and benefits are compared. If social costs exceed social benefits, the government will not proceed with the project. If social benefits exceed social costs, it will go ahead. If the net social benefit is greater than that on rival projects, there will still be a debate, however, on whether it is the best use of government money. Government expenditure on one item always involves a significant opportunity cost. The money could have been spent on, for instance, education. Cost-benefit analysis, a method of assessing investment projects which takes into account social cost and benefits,